Okay, our first keynote here on the InsurTech stage is entitled Zurich Insurance Leading the Global Startup Challenge, and it's presented by Joel Agard, Group Head of Innovation at Zurich Insurance. Joel, thank you very much for joining us and taking on the mantle as our first speaker here on the InsurTech stage. The floor is all yours.
Thank you, Alex, and good morning, good afternoon, and thank you so much for dialing in. And it's an honor to kick off the InsurTech part of this amazing conference. So, yes, my name is Joel. I head up the innovation team at Zurich Insurance Group, and today I want to talk about our secret sauce of successful collaborations between startups and incumbents. I will also quickly share some insights with you on how innovation and insurance in our world, in our Zurich world, come together before giving you a bit of a deep dive on our very own startup program, which has become one of the largest startup collaboration programs in our industry. And then I would also like to share with the audience today what kind of startups we're looking for and what is maybe not so within our appetite. And then I want to really leave enough space for a discussion at the end and answer any questions you might have. So let's start with a bit of a story. When I joined Zurich a couple of years ago, I joined Zurich from a big tech company. Before that, I worked in consulting, I worked in healthcare, I worked in startups as well. And many of my friends and even my family members showed some weird reactions. Why are you actually joining the insurance or the financial service industry? Isn't that a bit boring? That's not so innovative. You as an innovator, as a digital driver, why are you doing that? Right. So I knew what they think when I announced that I'm going to join the Zurich Insurance Group, one of the largest and oldest insurance companies in the world. Because and this is not a statement from my family members or my friends. This is actually a research conducted by a consultancy that more than 50% of people would rather go to the dentist than deal with their insurance company. And this was pretty much reflected also in the discussions I had within my small bubble here in Switzerland. But I believe that insurance is important. It plays a key role when bad things happen. Each and every one of us don't really have a relationship with the insurance carrier or insurance partner. But when you need insurance needs to be there to support you with the recovery after something bad has happened. And this, for me alone, was quite a purpose-driven industry that I wanted to become a part of. And I am in a very privileged position because I can really change the way people perceive insurance. I am not doing that in isolation. I'm doing this with a fantastic team around the globe in more than 200 countries and territories that we are allowed to serve. And we were able to deliver quite some exciting things, because imagine a world where insurance is here to help you better understand the impact of weather and can help you as an individual or as a company to better understand the impact of weather and prepare yourself before bad things happen. Imagine you drive your car and you have a crash. What if a car could actually trigger the needed supporting elements right at the place where it happens, without you having to call anyone or drive to a garage or a body shop to get it fixed? What if we, as an insurance company or an insurance industry, can be at the workplace to prevent injuries in the first place? What if we all together could help our customers to manage chronic diseases in a much easier and digital way? So all of these examples that I showed you are not fiction, and they're actually reality. And this is part of my job. I was able to work on various projects around the globe, support our business units from around the globe to tackle these things that I just mentioned. And we are not doing this in isolation within our labs. No, we're doing this with business units. We're doing this with startups. And we did this by co-creating in light of our very own program called the Zurich Innovation Championship. But let me take a step back before I do give you a bit more an insight on the Innovation Championship, because this journey started a couple of years ago when I started working for Zurich. Working with startups wasn't the norm. Working with other big tech players was the norm. Building great things in-house was the norm. We innovated for the last 150 years on a constant basis to meet the evolving demands and the demands from our customers. So innovation wasn't new, right? But innovating with startups was quite new back then. So we started with the Innovation Championship to show that actually working with startups can work, that working with startups can deliver business impact. So we started and really raised this awareness across the group, internally, but also externally, that it is actually a good thing to work with startups and that we really can generate great things together in order to protect our customers and communities around the globe. We very fast then moved into the era of exploration and collaboration, as we called it, really making sure to facilitate the matchmaking between startups, strategic business problems, the business units, and internal stakeholders. Really brought all of these people to the table and made sure they started working on key strategic priorities. Now, with the latest edition of the Innovation Championship that we launched last year, we introduced a new accelerator framework that was fully focused on delivery and results. We just recently, this year again, relaunched the latest version of the championship, where again, an accelerator element is an integral part of the program and is really aimed to deliver results. Results for us, but also results for the startup and all the other parties involved. At the end of the day, we share a common goal, which is to protect our customers across the globe. Because we believe that it's not just a small startup, a small vendor that is offering a small, tiny piece of technology to us. No, that's definitely not our approach. We really have this eye to an eye mentality, where we believe if both bring their key strengths to the table, we can really move the needle for Zurich, move the needle for our customers, but also move the needle for the startups. Because startups have the right to be at the table, because they they're very close to emerging trends. They were born in a digital world. They offer the best technology you can imagine, and they are used to thinking outside of the box, because they need to think outside of the box in order to serve the needs of their customers or win customers in the first place. Where we as incumbents also bring in quite some capabilities, being it our global scale and access to a global market, being it our brand, being it our customer base, but also the industry know-how, right? We turn 151 years of age this year, so we know insurance. And if you bring together these two worlds, I believe magic will happen. I mentioned quickly the secret sauce, and this is really the first time I'm showing this because I believe it needs more than just a startup and an insurance company that want to team up. It needs a pot full of committed people with a strategic alignment that want to really move the needle and want to generate business impact. So it needs a startup that is that has the right mindset. It needs business unit ownership, right? We at Zurich Insurance, we are a very decentralized organization. So just building something in the ivory tower and trying to find a problem for the solution won't work. So we need to bring in business units that show ownership, that are empowered to drive these initiatives. We match them with the best of the startups we found, support them with senior leadership and strategic alignment, and then we basically bring them into a validation exercise, which I talk a bit more about in a minute. But we're not doing this in isolation. We are also, if something works, we're building this internal awareness to share knowledge of things that work very well, but also things that failed. And this mindset of failing fast is something that we were able to introduce as well with this program. It's not a bad thing to fail if you fail early and if you fail cheap, but also building the external awareness to make sure that also other players in our ecosystem are aware of what we're doing is, of course, key. So to really move things into the right direction, to really generate this movement, we were able to bring together this secret sauce, or the pot with the secret sauce to then really accelerate the time to validation, as we call it, with this very, very special program. So let me quickly talk about this validation sprint, because this is very interesting, because we just added this last year, and it really generated, or it really reduced the time to validation. Again, it is okay if we stop something if the evidence is not on the table. But of course, we all want to see also the success cases. So many of the initiatives that we start make it through the entire funnel. But we always start with a problem definition, right? We are not searching solutions and then trying to find a problem. No, I am part of the group strategy team, which is basically very close to the definition of the strategic priorities, as you can imagine. We then try to carve out the initiatives that we believe we should solve with startups. We then explored the ecosystems out there, being it in Israel, being it in Tel Aviv, being it here in our home turf in Switzerland, to really find the best startup to match to the problem definition that we've set to ourselves. We then enter a bespoke validation sprint where we invite the startups, the business units to really collect the evidence, the irrefutable evidence that something works or doesn't work. At the end of this sprint, we have a milestone where we either send them through another validation sprint, or we say, well, there's enough evidence for a follow-up funding into the project, not into the startup, into the project, or we stop it. And if we stop it, we celebrate that, and we celebrate the learnings that we were able to capture from this initiative that we stopped. And then, of course, us being a global company, serving more than 200 markets, cross-border scalability of a problem or a problem that we defined, and the solution that we matched is, of course, also key for us at the end of the day. So this is also something my team facilitates. So this, on a very high level, of course, there's much more detail to that, but given that I only have 20 minutes of time, I think this is a very good snapshot of how we drive our innovation agenda. Now, I talked about the very first part, the problem definition, and I would like to stress again that it is important to stick to the strategic priorities and really solve these strategic priorities by then exploring the right solution. And it can be that in some of the cases, the solution is not coming from a startup. It can be something that we build in-house, or we have many other big technology partners out there that we co-create with as well. In some cases, we even co-create with customers. In some cases, we co-create with partners. So it's really an open innovation mindset that we're living here at Zurich. We collect these strategic priorities not only by listening to business units in the regions. Of course, we are also observing technology trends. We are listening to customers around the globe, and we then define the priorities that we want to focus on with startups. And you can see here the current ones that we launched just recently, which are the 5 topics around customer experience, commercial insurance, distribution partnerships, digital enablers, and sustainability. Now, the Zurich Innovation Championship, as I said, is not new, and we were able not only to grow the input, so the submissions we collect from startups. I am extremely proud to also contributed to the fact that we have triggered 30 ongoing collaborations in the first 3 editions of the championship. And it really is a global movement, right? It is a global movement because more than 30 countries, so Zurich business units, are involved and are currently executing on these different partnerships with startups. A partnership can have many different dimensions. It can be us just using a technology in a SaaS agreement. It can be a joint go-to-market. It can be a joint venture. It can be a normal vendor relationship. It really differs. We typically don't invest in a corporate venture capital setup into these startups. So if we should invest, this would be then really a strategic investment and not a CVC kind of setup. So I talked about the startups that we are working with, but maybe I would like to also spend a minute or two on the types of startups we are looking for. It's not only about the size, the maturity, the geography, the footprint. It's the mindset that is the most important element. We at Zurich want to work with zebras. And I personally love zebras, but in the startup context, even more so. Why? Let me take a step back and let's have a quick look at some trends in the startup ecosystem in terms of investment. So if you have a look at the left chart, and we didn't create this chart ourselves, it's it's captured. You can see the source here on the bottom left. But what it indicates, what it shows us, is that the venture capital funding in the last 3 years, after hitting a peak in 2021, just recently it saw quite a decrease in terms of funding. And this includes angel seed, so early stage, very early stage, or even late stage, and private equity funding. Also, what you can see is that, again, here, there was a peak in 2021, early 2022, in terms of unicorns that got created during this time, but there was a massive decrease. And this also reflects what we are searching for, because the funding that is still going into the space is more shifting towards funding into startups that have a clear path to profitability, that have a clear path of collaboration within our ecosystem. And this is basically what we're searching for. There is a space for unicorns. I personally am super excited reading about unicorns over and over again. And I'm a big fan of some of these unicorns out there. But what we are searching for are zebras. Zebras that are not focused on growth at all costs, but share a social purpose, that have a sustainable path to profitability, that share our vision and our brand purpose with really being open and thinking about the customer first, searching for synergies, being inclusive, and searching for collaboration opportunities and not competition, not only looking at how they can compete with incumbents and other players in our market. So the zebras is what we're searching for. Zebras is what we found in the last 4 years where we were running this program. And I'm extremely excited to, again, just enter the accelerator in 3 weeks, where we will welcome here in Zurich the next 13 of these zebras to enter with us again on the journey of collaboration. So with this, and just in time, being Swiss myself, I would like to leave some room for discussion or questions if you have.
Okay, thank you very much, Joel. If you do have any questions for Joel, please feel free to leave them in the comments, and time permitting, we'll try and get around to answering as many of those as possible for the time being. Joel, we do have some questions already in. So if we can start with the fact that there's been a little bit of suggestion in the media recently that despite the amount of noise that we make about insurtech, maybe it actually hasn't managed to disrupt insurance totally the way we'd expected it to. What do you make of those suggestions?
Yeah, I agree. And the most promising startups or insurtechs, there's two answers to that. So let's start with insurtechs. The most interesting insurtechs, and that was also just recently one of the big four consultancies shared a report that actually 91% of insurtechs are not planning to tackle the entire insurance value chain and want to make incumbents redundant. In fact, 91% want to collaborate with startups and help incumbents do a certain part of the value chain better, want to improve a certain part of the value chain for incumbents. And these are the ones typically that are the most promising ones. And I would like to highlight that insurtechs in the list of the 30 plus startups that I shared, I would only consider like 1/4 of the startups on that map being insurtechs. We found for ourselves quite a broad scope that works for us, being it climate techs, mobility techs, being it clear technology, enterprise technology players, being it health techs. This is super interesting for us because they come from a different industry and we can plug them in to complement our existing business model to better serve the emerging needs of the customers. So two answers to that question is: number one, really insurtechs that don't want to tackle the entire value chain. I think these are the most promising use cases as opposed to the ones that want to tackle the entire value chain. And then if you look at us specifically, insurtechs is only a small part of what we're actually searching for. We want to build this ecosystem of startups and not just of insurtechs.
Okay, thank you. We've got about 20 minutes into a discussion on insurtech and we haven't mentioned ChatGPT yet. So let's rectify that, because one of our commenters says they believe Zurich recently tested how it could use ChatGPT for claims and for modeling. Are you able to share with us either some of the results of what you found or some of your own thoughts about using chatbots like ChatGPT to improve the insurtech value chain?
So working with chatbots isn't new. We, in fact, just a couple of, I think 1-2 years ago, we just acquired a big chatbot or conversational AI company. So it's not new. Chatbots are around since many years, even more than a decade, I would say. Now with ChatGPT, this of course offered us quite some interesting opportunities because it raised awareness that what is possible. It showed the art of the possible. While we at Zurich, we of course within our group tech and ops department, we are working. We are assessing the technology on not ChatGPT, I would say more on GPT-3. But what is important that there is a lot of opportunity out there, but it's also quite important to look at it from an ethical point of view. This is why we also, besides running several of these initiatives with GPT-3 across the globe, we also introduce an AI framework to set the rules. Not only for our business units, but also for our own data analytics and AI teams across the globe. So there's many use cases that we are assessing, of course, and just like any other major insurer, this is a big opportunity, but it also comes with the duty to look at it also from an ethical point of view, and we need to make sure that everything that we do, we need to be able to explain. So it is a super exciting space to start off with, but it's also something that we always need to also look at it from a not only regulatory point of view, but also from an ethical point of view. And this is why I'm super proud that we are definitely leading the pack there in this discussion as well.
Okay, yeah, I'm sure that's something we're going to hear a lot of over the coming weeks and months. Another commenter has said, What do you think has driven the massive reduction in venture capital funding for startups? They say they presume the interest rate environment is a big one, but do you think there are any other factors at play at the moment?
Yeah, definitely that's one of the main drivers, but also it's now I believe it was a healthy rebound that we saw here. I think we'll see some increasing investments going into that space. Of course, I do not have this crystal ball, but now the shift of the investors investing into startups that are really just focusing on growth and not really taking care of customer acquisition costs, route to profitability wasn't very healthy. So I think it is a very healthy thing that happened, because there is still there are still ways to raise capital nowadays, but you need to really have a clear understanding of the customer, of the pain point, how you reach these customers, how you keep these customers, and how at the end of the day, at one point in time, you can earn money. So I think it was quite a healthy shift that we experienced out there. But of course, yes, a rise of interest rates and other geopolitical factors influence that as well.
Okay, thank you. Our audience is very shy so far this morning. We've got a lot of anonymous questions for you. Do feel free to put your name to any of these if you really want to. But another commenter has touched upon the point you made briefly about sort of the regulatory landscape and asked, do you believe that there are common sort of regulatory challenges or even opportunities that you're noticing with the startups that you're working with?
So I think one trend that I see, which is both an opportunity but also might also be a challenge, is the fact that open data is becoming the norm in some regions of this world. In LATAM, in Brazil, for example, open data is already a big topic. So this, of course, is a big opportunity for insurance companies, with data being our bread and butter and our engine. But this, of course, the more data that is available for us, it also brings the risk that this data might be misused. So we need to, there again, proactively ensure our customers that they can trust us when we use their data, being it data they share with us or data that is freely available. There are many use cases that we are spotting while assessing all of these startups, and many of them do already have an open data label, if you will, assigned to it. But it is always important to also look at it from not only a regulatory point of view, but with our data promise that we introduced a couple of years ago, we are even stricter than many of the regulations out there when it comes to using data of customers. So not just because, so if we are allowed to do so, doesn't mean that we are actually doing it. So there is a lot of opportunity out there, but we are always looking at it from a customer point of view and from an ethical point of view.
Okay. You yourself have worked, of course, for both startups and for incumbents. So having seen both sides of the coin, if you like, do you have a sort of number one piece of advice that you'd give for sort of fostering successful coexistence or collaboration?
So yeah, if I would have to give a piece of advice to startups, it's really to make sure to understand that decisions in big corporates, not only in insurance companies, take longer than you might expect. The sales cycles are longer. The cycles to get a yes or a no might be longer. So identify your buying center early enough, and search for a sponsor that can help you navigate within this corporate setup, because it might be quite complex to navigate. If I should talk about a recommendation for my innovation and digital colleagues working in corporations, it's really trying to set in place this safe haven where business unit experts, stakeholders internally from functions, from functions and also leaders can meet with startups and define clear strategic goals to explore and set clear KPIs for this exploration and validation phase. And don't be shy to pull the plug and then to celebrate it. It might feel a bit weird at the beginning to celebrate the failure, the stopping of a project, because we're all humans, right? I fell into this trap many times in the past. I fell in love with my projects, and I didn't want them to stop because I had the feeling that this must solve a problem out there, but it actually didn't. So give the people the freedom to stop, and to stop with pride, and to share the learnings is one advice that I would like to share with my fellow corporate innovators as well.
Okay, thank you. Somebody mentioning about copies of the presentation slides. All of this, of course, will be available on demand, but presumably if people connect with you on LinkedIn, Joel, you'll also be happy to provide copies of that Zurich corporate deck that you showed earlier.
Yes.
Perfect. Thank you very much indeed for joining me. That's the end of our first session. Unfortunately, thank you to Joel Agard from Zurich Insurance. We'll be back with you after this short break.